The premise. This is a $1 million stock portfolio. What if I told you this is potentially all the money you may ever need to avoid working again? That's a lot of money, and even with inflation, most of us have the potential to earn this much in our working lives. Unfortunately, we will probably only achieve this goal towards the end of our lives, when our energy to enjoy this money might have diminished. Furthermore, if we invested $1 million into the S&P 500, it would only net us about $14,000 in passive income via dividends, with its very low yield of 1.4%. Passive income is the key to be able to retire early. It's what prevents us from having to wake up early for work or pretend to care about what our coworkers did over the weekend. The solution. Although there is multiple ways to earn passive income, like real estate investing or owning different businesses, I can't think of one that's more easier than dividend investing. This involves buying high-quality companies over time and having the dividend income pay for all of your living expenses. Generally, these companies give annual pay raises and get to experience capital appreciation. There's absolutely nothing wrong with this strategy. In fact, it's one I practice myself. It's just that it takes a really long time to accomplish, and it takes a lot of total principal to accumulate enough money to live off of. Even going back to the example of $1 million in the S&P 500, you can't live off $14,000. According to the Bureau of Labor Statistics, the typical American household expenses are $5,100 a month, or about $61,300 a year. Obviously, several factors go into this number, like how many people are in your family, where you live, what you spend your money on, etc., but that's the whole purpose of averages. The ETF. What if there is a way to retire early, much quicker, and without as much money? This can be made possible with the ETF XYLD, or XYLD. This is the Global X S&P 500 Covered Call ETF. They track the market index and sell 1 month at-the-money call options on positions that they hold. And these positions are very high-quality companies, since it's mimicking the 500 largest companies in the US. I'm talking Apple, Microsoft, Amazon, Google, Johnson & Johnson, all companies I personally own for the long term. They are not junk quality like a lot of these other investments that offer high dividend yields. XYLD boasts a very impressive 12-month trailing dividend yield of just under 10.5%. For comparison, the stock market based on prior history returns on average 7 to 10% annually. So XYLD gives that amount in dividends alone. This is the cheat code that we needed. This is what will help us achieve financial independence faster by taking advantage of that impressive dividend yield. Our goal is to get paid as much money possible from our dividends while putting in as little principal as possible. Now, the way that XYLD is able to fund this ridiculous dividend yield is through selling covered calls. I've covered this extensively in other videos if you want more details. A quick summary of this is a contractual agreement between two parties, the buyer and the seller, to exchange 100 share increments of a company if a certain stock price, called the strike price, is achieved by a certain date. XYLD is the seller in this case, as they already own the shares, and they get paid a payment from the buyer, known as the premium, for taking on the risk. If the strike price is reached by the end of the contractual agreement, the shares get transferred over. If the strike price is not reached, nothing happens and the contract is terminated. This is a great way to generate passive income, as the more volatile the stock, the higher the premiums will be. The big trade-off, though, is that if a stock does really well, we will miss out on all the upside in capital appreciation because we have a contractual agreement to sell at a certain price. The stock market could also fall, but that's always going to be a risk when doing options or not doing options. In fact, I'm really impressed with how XYLD has compared to the overall market. Since January of 2021, the fund has actually done better than the S&P 500. I would expect this to continue being the case in down or sideways markets. I personally think the stock market will continue to trade sideways for quite some time, as I don't think the full impacts of C-19, supply chain issues, global conflicts, and inflation are priced in correctly into the market just yet. XYLD will likely trail the overall market during bull runs, but this video is not about capital appreciation, it's about the fastest way to live off dividends. The magic number. In this scenario, let's invest all of our money back into XYLD to get to that $61,000 in expenses number. The dividend XYLD pays out will change month to month because it is directly correlated with how much they are bringing in premiums and market volatility. Currently, they pay $4.93 a share, which means we would need to own over 12,400 shares of XYLD in order for all of our living expenses to be paid for with monthly dividends from XYLD. That means the magic portfolio value needed for retirement is about $586,000, or just a little more than $500,000. Now, if you wanted to get a little luxurious, just double that amount, and with about $1.2 million, you can get around $120,000 a year, which is definitely a very high quality of living lifestyle for most. That is still a lot of money, but nowhere near the $4.4 million needed to get the same amount in dividends if we just invested in the S&P 500. Now, I'm obviously oversimplifying this. I'm not taking into account compound interest, which is basically when all the gains you previously made help you make more money. So all the money made in prior years, that's going to help you on your journey into making more money. You won't really need $4.4 million as the market will help you get to that number. But the same logic applies to getting compound interest with XYLD before you are ready to fire. It's also important to consider taxes with XYLD, as they will likely be taxed as ordinary income instead of qualified dividends because they do options trading, meaning they will fall under your highest income tax bracket. But there are actually numerous other income ETFs that I previously made videos on. They actually have a slightly lower dividend yield, but they do at least give a portion of their dividends as qualified. A couple examples are JEPI or BST. The decision. So is this the best option towards early retirement? That's for you to decide. For me, I'm a younger investor and I don't mind waiting for my investments to grow. But I know not everyone starts investing when they're in their 20s or have decades for the market to go back up again. For those that are older, this could actually be the better route to start earning those big bucks today and be another form of supplemental income. XYLD has an impressive history of giving returns in the nearly 10 years it's been an ETF. Currently, they control over $1 billion in assets under management. This is a way to get your dividends on steroids, beat bonds, and is overall just more passive than owning real estate or owning a business. For me, I also want to retire by spending part of the year living in Latin America, as the women there are much hotter. I'm sorry, I mean the weather is hotter. The cost of living is considerably cheaper, and so are those insane medical costs here in the US. And this means I need to save less money in retirement as I can get that magic portfolio value to be even lower. Financial independence is all about options and freedom. So let me know what you think of XYLD and how it might help us reach FIRE. If you have better alternatives, please let me know in the comments below. These videos do take a lot of time and research to edit, so be sure to hit that like button so the algorithm actually shows this video to people, and make sure you're subscribed as I constantly make videos like this all the time. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.